Hey traders, welcome back to the channel. I hope you're all doing well. We got quite a bit to unpack here, so let's just hop right into it. We're going to talk about Bitcoin today. We're going to cover ranges and fib levels first. Going to give you guys the key areas for the downside and triggers, and then also going to roll into a little bit of Ethereum. And then at the end, we're going to cover a little bit more on Fibonacci here and a little bit more about Harmonic. So I'll also cover some day trades that we took just as an educational thing. So if you guys are curious on how we trade every day, you can get that information there. So right off the bat here, you notice we're on the 4 hour. This is our swing failure pattern right here at 54,300. You can see we held these lows here and we've come back and now back tested them. Now, when we made this dump at the weekly open, there were several things that you could have lined up and taken the trade on. What had happened was we came into the range right here, and as we were dumping, we came down to the point of control, blew straight through it. I think the weekly pivot is there as well, all the way down to the weekly value area low. From the weekly value area low, or the previous week value area low, excuse me, we've bounced to the point of control. Now, that is a natural progression for price inside of a range. You're always going to, revert back to that POC as the first target anytime you hit the value area low or value area high. If there's a rejection or a buy up, you're going to be looking for the POC of that range. And so we've essentially cycled the range and now come back up to our major target. And this is where you would take your profits. And so not only was that there, you also had the March point of control coming in here right around that area. And I believe we had a weekly level there as well. So there was a lot of confluence for this to be an area of take profit if you were long, which I was. And then flipping into a short. Now, as far as that goes, that was something I even posted on Twitter, gave the setup there. Yeah, so over on Twitter, my handle's down below. If you don't follow me, feel free to. I post a lot of content there. This was the setup here. So we had a bat right here, and we were looking for this B leg to be a long, which we got off the median of this little channel. And then from there, we went to a butterfly to the highs of the current weekly range, which we're going to take a look at here in a second, as it's getting things really well. So you had two harmonics back to back on low time frames here. This is a bearish harmonic. Hits the first target of the bearish harmonic, and then we are looking for the highs of the range. Also, the 50% retrace for us, the weekly levels just above us, all the things we just discussed are there. So we know that this is a good take profit area and to look for shorts at this time as you're at resistance. Now, not only did we come up to resistance right there, and I'm going to switch down to an hourly here and change up our ranges. So not only did we come up to that resistance, you can see where our daily open here is. This is just a nice little tool here, by the way, this DWM, daily, weekly, monthly open tool. I would highly recommend it. Put it on your charts. It just puts them on there. You can change the colors if you want. Super easy. We have previous day data here. So this is our previous day data. You can see we closed outside of the day. And so as we came back into it, what do? We got those two harmonics to cycle the current weekly range that is developing right here, right? So this is what we had going on, and we targeted the high of the range. And so things panned out really, really well. Didn't quite tag the weekly, but it did tag the high of the range. So that was your cue to get out. I think a lot of people did. I posted my entries and exits on Twitter. Also, they're in the group in the cooked section, the winners section, as far as when we post our wins or losses. So everything's pretty transparent there, showing you guys how you could have traded this. That way you guys can ask questions, or if you guys were looking to get into the moves, these ideas are conveyed real time throughout the day. This is what I do for a living. So if you're looking to get in the group, my Discord name is down below. Just shoot me a message and I'll send you a link to get in. So right now, you can see we've come down and we've retagged the previous day value area low, which would be the ultimate target after you find acceptance back into here. Now, you did have a bounce right here. That was a low time frame shark pattern on like the 5 or 15 minute, but did not reverse the trend, and down you come and you visit the lows of the range. So this is your current weekly value area low, also your previous day value area low. So you had a lot of confluence for this to be a bounce. Plus, you remember the swing failure pattern we discussed earlier. You can see the little line right here. Also there at 54,300, that is now a key support that bulls are going to defend. Those people that bought these positions in anticipation of maybe trying to time the low, these traders that are defending that area are going to target that region. That's just where they've, that's where traders have settled up on that time frame, the 4 hour at that time. So I don't normally use a 4 hour for supports or resistances. So, but I will if there is an SFP involved. That is the only exception I'll make on that. I know some people like putting 4 hour, supports and resistances on their charts. It's not something I'm looking for. So yeah, I mean, where do we go from here? I mean, obviously, you're looking up to potentially the previous day point of control and the weekly point of control here. So anywhere from about 55,600 up to about 55,790 would be the target if you took this long. Now, you might want to be a little more cautious because should we lose these lows, we will head down to that $52,500 region. We do have several daily levels there, and we have some interesting data to take a peek at here. So I'm going to get rid of this weekly level and this previous day data because now we're going to look at some high time frame ranges, some stuff that really actually matters in the scheme of things. So we have our macro Fibonacci levels from the old range low here to our high of this move, right? You can see we're trying to hang on to the 382 with the 50% coming in here. Now, I am of the belief that if we come down to this $52,000 level, you guys know I like harmonics. We've been monitoring this 5.0 and I've been talking to you guys about it. And I want to discuss something with you because harmonics are a really interesting thing. You have to really pay attention to the details on these things. There's a lot of invalidations that come along with these. You can't just wing it and hope it works out. It's taken me about a year to get really good at them. There's two books that I've read here. They're both by Scott Carney. I post his website link quite a bit. It's harmonictrader.com. I'd highly recommend it. But looking at the 5.0, we had one prior to this, and we are looking like we wanted to form a very similar one. So this was the original 5.0 right here, if you guys recall, and it played out perfectly. The target was the 113% retrace, which we absolutely just nailed. I believe it was this guy right here. You can see you tagged the 113. Couldn't hold it as support because otherwise you'd be targeting the 1618 at 68K. The issue is, well, I mean, you got stopped here at the second target. So now you retrace. Now, if we look at it again, you've got a second 5.0 right here, perfect 5.0. The issue is the D leg here. So when you're looking for this 50% retrace, which is what we're coming into, and I've seen this on Twitter from a couple other guys who do harmonics, and I'm not saying that they don't know what they're doing. I think they post really great charts. I just think that you have to be careful with this one because I don't see this 50% retrace at 52K being the area that people think it is. One reason is we have the monthly ranges to consider. So our February range is right here. This is our February range. We'll be finding our way back into it should we come down to this level and not get the bounce, right? Where's our point of control on this one? It's down beneath the 618 of this range. It's way down here. This is our monthly range. So your current March range does say that if we get back in here, there is a chance to bounce from this golden pocket still. But I don't really see anything at the 50% here that's saying that we're going to come down to 52,500 and just reverse territory and go back to all-time highs. I'm not saying that can't happen, but from a perspective of harmonics, you have to have certain types of symmetry in order to get to these levels. So what do I mean by that? You have to have an AB equals CD on the 50% retrace of a 5.0 shark. That is in Scott Carney's second book that he wrote. He's the creator of this pattern. And so if we go to the original one right here, you did have that. You had one very perfectly. You had a one-to-one move basically from here down. You can see where you came in right at that one-to-one, a little past it even, but that's okay. This is pretty close. Now, if we were to look at our current trajectory, with this being the low, this is our second high, excuse me. So we've put in our low, and now we're putting in a lower high, a much lower high. You can see that our one-to-one comes all the way down here, and we were just looking at the 50% up here. So we're nowhere in the realm of being able to form any kind of a AB equals CD pattern for this 50% retrace. So I'm not looking at this as a 5.0 shark. In fact, I would be looking at this to probably fulfill lower targets. And those lower targets on a proper shark, which we have identified, which we'll throw that up one more time for you guys. So the proper targets on a shark non-5.0, which is a bearish reversal pattern, comes in like this. This is what it looks like without the 5.0. It's a really nice, clean image here. What you can see is you're just adding in the 0xabc, and then you get what you need here. You can kind of see how it forms. So this right here would imply continuation down. And so now what we're doing is we're pulling back up those fib retracements that we just had right here. And first target is going to be the 50% retrace here because it is also coming in pretty close to our B leg. So now we look at this right here and we say, okay, do I have any confluence for this to be along outside of this just being one, the median of the pattern, and two, being the 50% retrace? I mean, we do. We have some horizontal levels that come in there. We've got all kinds of data from like, ranges and whatnot. It's just one of those things where the horizontals are going to be key. I believe it's these guys right here. There we go. This is your little box of confluence, right? So these are your daily levels that you're keeping an eye on. So should we lose this level right here, I'm expecting a quick move into this region for the B leg of this shark. Now, since this isn't going to be a 5-0 due to the structure right here, because this isn't a 1-to-1, this is not an AB equals CD for D. Doesn't mean this can't reverse from here and then go to all-time highs. I don't think that's what we're doing. I think we're more likely to put in a lower high if we come down to this region at this point. In order for this to be somewhere where it was a reversal pattern, at least from a Fibonacci and a harmonic standpoint, this would have to bounce from here and come up much higher. It would have to come up much higher. That way, when we pulled our our retracements, it's coming in from up here, and you can start to see how you start dragging up that 1-to-1 where it starts mattering, and that puts us up in the 60K range. So we would need to bounce all the way to the 60K range to confirm that kind of a pattern, and for a bullish reversal at that point. Now, this doesn't mean the bull run is over. This doesn't mean that we're now bearish all of a sudden. It just means that more than likely we're going to get further consolidation, and this is something we discussed weeks ago. When we were back in this range, we were talking about how this thing is 36 days long and that this thing's got to be shorter than 36 days and get continuation. Otherwise, it stands to make sense we're going to come down and form a different formation, and we have to look at this as a completely different consolidation structure. It doesn't mean it's distribution, it just means it's a bigger reaccumulation range, and that's obviously what we're getting. This is going to come back into play at some point. This is going to be our reaccumulation range as well, and we'll see if it holds here at the lows. So the targets on this would be the B leg here down to the golden pocket and then the 886. So our 886 would come in here. And you can see that's our monthly open. So we also have a weekly level there. So to me, this is the area I'm most interested in right off the bat, is this weekly level at 45,239. Now we can reverse from this little box right here. Obviously, like we said, the March value area lows are coming in this region. We just discussed that as far as what our monthly range looks like, right? We said this is our March value area low, but we also just talked about how if we find our way back in to the range on February, the idea of cycling to at least the point of control here at 47 grand is there, which would put us in a deeper retrace, probably like 786 to 886 territory, which again comes in at this weekly level, comes in down here near the POC of the old range. And so for me, while you don't want to count your chickens before they hatch and be overly bearish, to me, this looks like where we're probably heading at some point. It's probably down into this range, and we may even fully cycle it. Now, that's not the end of the year. To me, that's an opportunity, and I'm going to play these other levels to the best of my abilities until that time comes. But at the same time, I need to be aware of the possibilities here. And the possibilities are that we could come much lower and fulfill this $43,000 to $45,000 area once again, because you have to remember, again, let's get rid of some of this stuff on the chart. The targets on a shark are going to be the 50%. Generally, you gloss over the golden pocket. I never like saying that because I'm a golden pocket, fanatic. But that would be one of those things where 50K would be kind of the line in the sand. That's your March value area low. Again, if you lose that, more than likely, at a minimum, you're going to see $47,000. I do think at that time, though, you don't really stop. You come down to this weekly level at 45,239 and the monthly open here, plus the 886, which according to the shark is the second, or the second target at the 886. What target comes in after that is the 113% retrace, and that would put us all the way back down at 40,493. Do we have anything at 40,493? We do have an old range here with an old POC coming in there. If you recall, this is our weekly high range from that area, and it just lines up so nicely. I mean, it's just one of those things where how can you be upset at this, guys? You're coming right into the POC of your prior all-time high at that point. So all the volume data, all the Fibonacci levels, the horizontals, they're all there. We just have to take it level by level, make the most of the opportunities. So for me right now, it does look like this wants to break the range, to be honest with you. I mean, it's really testing it. So I've got no interest in being involved in this right now. I'm just watching. Want to see if this can get legs to the upside or if this is going to come down and hit these two dailies right here at the 52,509 region, find acceptance back into that February range. So for upside, let's say this does bounce. You need to basically get above this weekly and then hold it as support. And then even 58,500 is coming in there. So you got to be careful there as well. That's how I would be looking at Bitcoin right now. And Ethereum and them are going to follow suit. So let's look at Ethereum. Ethereum, everybody's very bullish on Ethereum. I'm not. Again, this has painted a bearish pattern as well. This is looking very similar to Bitcoin. This painted a very large bearish bat. This is a reversal pattern. You get a very deep retrace to the highs, put in a lower high, and now you are selling off. So if Bitcoin dips lower, I expect Ethereum and altcoins to follow suit. And targets for Ethereum has already hit the first target of this setup pretty much. You were targeting essentially the 382 if I recall. Let me see if these are, yeah, here is your, I believe these are the right fibs. Yes, they are. Let's get rid of this as an extension. So these could be looked at as opportunities. Don't get me wrong. I'm not saying you can't trade this. You just have to be ready to put in a stop loss because this is going to potentially get ugly if it loses support here. So what you've got here is coming down to the first target already of this bat. You should have already hit TP1. TP2 is going to be down here at around $1,600, 1611 to 1618. This is the next area of interest for me. Now, you guys know that 1719 was the big area to hold. If we got above it, we challenged the weekly. What did we do? We came back, we back tested it. We came all the way back up here, just back tested right into some of this daily resistance here around 1,800 bucks that we were talking about, and now selling off. So coming back down to this doesn't really look great. If it does lose this level, I am looking down into the $1,600 region. That is like your B target here of the bat. What is this? 1656. Down to 1618. I'd put that little $40 window there. And then after that, you are targeting the C leg. Now, your golden pocket does come in before this, so do bear that in mind. I would give this probably a little bit of weight here at 1541 to 1514, but if that golden pocket does not hold, you will be looking down into the 1441 region. So that would be the next area of interest. If that area does not hold, you do have these two weeklies at 1347, 1392 that will be of interest. Went ahead and added the weekly charts up here. So this is your previous week range right here. You can see that we are trying to hold the lows of it at the moment with your current week right here actually falling out of it at the moment. So we're going to go ahead and get rid of these as I don't think they're all that important just yet. But what we do need to see is the February range here. And we are going to look at the March range because the March range is going to be key. For whatever reason, TradingView is not saving my ranges when I update them, which is fine. We'll just do it here on the video. And you can see that we've lost the monthly point of control on this one. So I would be targeting at that time about 1630, which is your February POC. And if you recall, that was also coming in right here in that region we were looking for on our bat. We said anywhere from about 1650 down to 1611. So this does line up nicely with that area. We've got a 2-day level of support there as well. So should Ethereum lose support here, if Bitcoin can't hold the bottom of the range, which again, it is support, so you don't want to get caught shorting that. That's how you get trapped. And then price bounces, those aggressive shorters that just get a little overzealous at the lows. Happens all the time. So, just take it step by step. So for me right now, if the lows do hold on Bitcoin here, I would expect Ethereum to get a nice little bounce as well. But again, holding 1719 is super key. That is really the big region we've been talking about. If you continue to hold this, you obviously have to get through this resistance here between 1780 and 1814. And then you do have the range highs here at 1840 from February. So this whole little block right here is just giant resistance at this point for Ethereum. If you are able to clear this, it's a pretty clear path to the weekly. And you guys know that's the last thing in your way before all-time highs, in my opinion, is that 1933 level, which we've tagged once. So more than likely coming up again, this would start to look like a rounded bottom. So that is the bullish case for Ethereum. So if you were taking longs on Ethereum, Your invalidation is really easy. It's the 1719 level, and you would have this rounded bottom forming to the upside. Now, if you don't get that, I'm not looking to long Ethereum until better areas of value. And the very first one I'm interested in is anywhere from 1664 down to 1611. This little box right here would be my first area of interest. And then after that, I'd be targeting the golden pocket we just covered as well. So down to really, I mean, yeah, I mean, it's so tough to want to, yeah, you'd be underneath the March value area low. You'd be coming in. Yeah, you know what? The golden pocket would be a good play because you do have the value area low of February coming in beneath it. If you lose this area right here, yeah, I mean, obviously you don't want to overlook your March value area low, but at the same time, this is what's most attractive to me at that time is that golden pocket with the value area low beneath it. So, yeah, that's what I got for you guys on Ethereum. Super easy trades in my opinion going on here, guys. You do have some harmonics that are playing out. So nobody can ever tell me that they don't work. They definitely work. And I'm finally getting decent enough at them that I can post them more often. I've been practicing pretty much nonstop, so pretty happy about that. But yeah, looks like Bitcoin is trying to hold the range here, and we will see what it wants to do. Hopefully you guys enjoyed the video. Do me a favor, smash the like, leave me a comment down below, and I will catch you guys in the next altcoin update. Have a good day.